G'day traders, John from Crypto Candlestick Trading. Just doing a different video today. This is a bit of an introductory video for people who don't have Bitcoin, who are wondering why we should buy Bitcoin and how to get into Bitcoin. So let's get on with it. So this is Bitcoin today. We've just had the halving, which is on this day here, Bitcoin halving day. A little bit of pop in volume, stochastics are oversold. This looks pretty good for just some sort of a support resistance bounce at the 50. That's on the daily chart. Let's have a look at the weekly chart. So weekly, previous all-time highs here, come back down, and now we've breached those all-time highs and finding support on that same level. So the Bitcoin halving, what actually is it and how does it work? So back in 2012, there was 25 Bitcoins every 10 minutes that were released to the miners. And after the halving, so Bitcoin's price doesn't halve or anything like that. It's basically the rewards for the miners that gets halved. That's what this hype is all about. So, and also, Bitcoin mining can be exceptionally rewarding as well. Now there's so many people doing it, it's a bit harder to get the Bitcoins, but like people with a basic computer back in these days here, we're getting 1 Bitcoin per day in a lot of instances. But in any case, 25 Bitcoins for the miners every 10 minutes back in 2012. When 16 hit, that 25 was reduced to 12.5. Then when 2020 hit, it was reduced to 6.25, and now a couple of days ago, we've just had it reduced from 6.25 to 3.125 Bitcoins every 10 minutes for the miners from 2024 until 2028, so the next 4 years. So as this declines, demand increases. Let's just have a look. So back here in 2010, 2011, 2012, it took off, the Bitcoin halving was somewhere around about here, took off, slumped, took off again after another halving, takes off, and another halving again. So we're up around about here, this price here now. Actually, we're not really. We're around about 67,000, around about this high here. So we've pulled back a little bit, but this is the price history. So we're up in a pretty good uptrend. So let's just have a closer look at what the Bitcoin halving produced. So here, this is the Bitcoin halving in January 9. What we're looking here is the block number and also the price at the start, but really we don't have very much to go by on here. The block reward is another thing as well. So this is the block reward back in 09. It was 50 Bitcoins every 10 minutes. And then when it got to 2012, it was 25 Bitcoins for every 10 minutes. Now we're at 3.125 every 10 minutes. In 2012, the block reward was reduced from 50 to 25, and the BTC price at the start was $12. Let's just have a look at that, what that looks like on a chart. So went from here, from Bitcoin halving at $12, and then this was the result after the halving, and this went a lot further up than this did. This is the beginning of it. It's only because these charts start to get really small and congested and stuff like that it starts to look like this if I don't stretch it out like that. But in any case, we can see there was massive gains after the halving. So 12, that's even that there's almost, getting close to 3 times your money from down here. Let's move on. 2016. So the block reward. So the block reward BTC was reduced to 12.5, and the price at the start was 663. Let's have a look at what the chart looked like. So this is 663, around about here, so under the 700 mark. So we can see here that what's actually happened after the halving. It declined a little bit. We broke above the 50, consolidated a little bit, then we started to take off. And this here, I was actually on this run. So this went from just under $700 to just under $20,000, and it was a straight up shoot from here pretty much, and it was very exciting to be on. Moving on, 2020, let's have a look at this one. So here the Bitcoin price at the start was 8,700, and the block reward has been reduced from 12.5, I think it was 12.5 down to 6.25. And let's have a look at the chart on that one. So here we are down here, that's the Bitcoin halving at 2020, and here we took off massively from here. At 2020, this actually went up from these lows here, from around about the 1,000 mark, all the way up to 68,000. So, fantastic run. This one here, so we've got the block reward BTC, just been reduced now in 2024, 3 days ago, to 3.125 Bitcoin for every block reward. And here this was the day here that it happened, where the top of that arrow is, and we've just come up to the 50 there. What's going to happen here? Do we find a little bit of rejection and come back down? We do know that we don't have smooth sailing straight after the halving. Usually we come up, find a little bit of resistance, chop around a little bit. We want to get rid of everyone that's in here that's got stop losses below here. It wouldn't surprise me if big money want to take them out, and just to make sure that this is an easier run going up. We don't have people that are amateurs that are actually selling halfway up sort of thing to slow this bull run down to where we're coming to. So we can see in history that we've had some massive gains there, massive gains there, massive gains there, and what's going to happen from here, we'll wait and see. So we just seem to be consolidating a little bit, and but once we take off, we definitely would be on this run if it's going to prove to be anything like the last 3 runs have been. So that's pretty much the reason why invest in Bitcoin. There's another side to this. There's a lot of people that don't like, are a little bit concerned about Bitcoin and getting into it, and I kind of go a little bit hard on these guys, on the Federal Reserve and the governments for, poo-pooing Bitcoin and saying don't get into it, it's too risky and all that sort of stuff. But now we've got large hedge funds that are being involved in Bitcoin and the crypto markets. And but what we want to do, the whole reason why this crypto market was designed is to be the people's money. So the governments have been stealing our money from us for years and years, ever since this Federal Reserve started, the most successful franchise in history. But back in 1971, Richard Nixon took us off the gold standard. So basically what that means is that before he took us off the gold standard, every dollar was backed by gold. Even if it was a small portion, but every single dollar was backed by gold. When he took us off the gold standard, that means that from now on, every dollar in existence will not be backed by gold. It'll be backed by, it's fiat, which is basically a currency that's backed by hot air and promises. And so, obviously that doesn't go very far. So since 1971, you can see that, if you have a look in price history, prices just went up massively since 1971, simply because they printed so much currency and inflation stepped in back then. So the sort of inflation that we can see now over the last, say, 3 years since COVID hit, the inflation that has happened is a direct result of the money printing that's happened since since COVID, and the government's printed trillions of dollars, and so all our prices have gone up because we need more currency to buy the same thing. It's a direct result of inflation. Money printing, inflation is a direct result of that. So so we see Obama and these 3 clowns really, like, just printing currency into oblivion, and then they get to spend it, and then they get to reap the rewards of the dollar at that time. Whereas we, as the public, we not only have to pay this debt back, but we also have to pay the inflated currency. So these guys here are buying things at the prices that they are now before the inflation hits the markets, and we get to buy after the inflation hits the markets. And here's a direct result of the currency printing. So we've come down here, the Federal Reserve Act, massive decline. So this is back when, it was almost dollar for dollar. The value of $1 US 2020. So, well, this is back then. Like, even then, it wasn't 1 for 1 back in 1912 when it first started. I think it was 1912 or 1916, somewhere around there. But anyway, massive declines. These declines happen from currency printing. US President Roosevelt criminalizes the possession of gold in the US market, and this is basically what happened. The Bretton Woods Agreement establishes the gold standard here, the US dollar, as the world's reserve currency. So the US dollar is the world's reserve currency. And they printed this thing into oblivion and just went out and spent it. And so this is the result of them doing that. Here's the gold standard, abandoned currencies no longer linked to gold. So this is the same again. This is the Nixon thing that I was telling you about. And so since then, they were just allowed to print currency at their will, and then this is the result after it. And so here's the QE1. And then, so this is now 2020. So they say there's around about $3 left of purchasing power in every $100 that's out there in the US market, or, under the US currency. And don't think that we're alone, because the US dollar backs the Australian dollar by around about 65%. So when they sneeze, or when their dollar declines in value, ours does too, to a certain percentage. So now that we've kind of leaving the gold standard, or the US dollar, and trying to stay away from fiat currencies, which they all are now, every single fiat currency has a 100% failure rate. So this will eventually go down to 0, and then will be put onto a different sort of a transaction standard. And so far I'm seeing that this is the new financial standard that we're going to be looking at. As much as the governments and central bankers don't want this to happen, this is basically what's happening right now. And here's some of the people that are saying that this thing is looking pretty good. This is Kathleen Wood. She's a hedge fund manager in Wall Street. There's a few of them here that I'm just going to show you. And she estimates, she's very popular for, she's from ARK Investments, and she's very well known for her accuracy and money-making ability for her clients, and she is all in on Bitcoin. She reckons that Bitcoin will surge to 2.3 million by 2030, and she also says that if the other fund managers were to put in only 5% of their portfolios into the crypto market, that means that we should see around about a 3.8 million US Bitcoin at 2030, which would mean around about a 5 million Bitcoin Australian by 2030. Anyway, Kathy Wood, she's great to listen to. I do like her ideas on Bitcoin, so if you want to search her up on YouTube, check it out. And this guy here, Michael Saylor, he's the same. He's worth about 4.5 billion. He just put $4 billion into buying Bitcoins. The group holds nearly 153,000 Bitcoins, and the aim is to accumulate as many as possible for their shareholders using cash flow, equity, and debt issues. This guy's even going into debt to buy Bitcoin. Now, I'm not sure if you've heard of a guy called Robert Kiyosaki. He wrote the Rich Dad Poor Dad. He wrote Rich Dad Poor Dad, yeah. So he actually, I've read his book, Rich Dad Poor Dad, probably 100 times plus. But he's actually got another book out, which is the 20th edition, and I'd highly recommend it. It's just an excellent book. He believes the Bitcoin price will reach 2.3 million by 2030 as well. He started buying Bitcoin at 6,000, which is really, really good. Now, about getting into Bitcoin, there's one thing that I do like to do, and I practice this all the time, and it's not very taxing emotionally when you're buying in like this, and this is dollar cost averaging. So this is the amount purchased. So you can either put dollar cost average every week, every month. This is what all I'm suggesting. This is not a recommendation to buy or anything like that. But if you were going to want to get into the crypto markets easily without too much emotion, this is probably a good way to do it if you choose to do this way. As I said, I'm not recommending anything. This is just this is just for entertainment, this video. So amount purchased, let's just say it was 250 bucks. Let's go back to 2016, 17, 18, 19, 20, and if you bought 250 bucks worth of Bitcoin back in these days, in these times here, so the price of Bitcoin for one, and then this is so 250 bucks back in 16, buying that there would be up to this price here. So we're looking at dollar cost averaging. So if you just only put in 250 bucks each year, this is what your results would be looking at today. So today's value. So dollar cost averaging can turn out to be a very, very profitable thing to do in the market. So I dollar cost average all the time. I'll put $1,000 or $100 or a couple of thousand. It doesn't matter. Just whatever I got spare, I'll put that in each week into the crypto markets, simply because I'm expecting a run like we've had previously. So that's dollar cost averaging there, just slowly putting your money in bit by bit. So one thing I do recommend is if you are going to dollar cost average into these markets, it's best to treat this like real estate. So if you had a house and you bought it and it went down 20% or 40%, you're not going to sell it because it's gone down 20 or 30% or 40%. You're still going to hold on to it and just keep on paying your rent or paying your mortgage or whatever, and then see what the outcome is in years' time. That's pretty much what this kind of investment portfolio, or like the sort of account that I'm looking at, is. A dollar cost averaging account, and I just put money in there, week in, week out. Don't really care, how it performs, because I know that after the halving, and once big money is involved, like Kathy Wood and Michael Saylor and another 9 others of them are buying into Bitcoin. That means, so in order for them to fill their ETF holdings, they have to buy $23 million worth of Bitcoin every single day for the next 10 years, in order for them to fill their holdings so that they can sell the ETF products to their clients. All right, so this is now moving on to cash to crypto, how to. Right, traders, I'll try to keep this as easy as I possibly can. But essentially, if you're going to try to get cash to crypto, I'm going to leave some links in the bottom of this video. If you go ahead with this link, you get $25 when you stake, and so do I. If you don't, just make sure that you type in this exact address, because one of the people that has worked with me lost $25,000 because they typed in crypto.com. Which basically was a mirror image of this trading platform, and so as soon as he deposited his money into there, it wasn't this address, and so he had his money stolen. So make sure that it's this address, or use the link below, just to be safe. So essentially what we're going to do is get money from our bank account into crypto.com, and then from crypto.com we pay 1% to convert it from Aussie dollars to crypto, and then from there on it's barely anything. It's peanuts to buy something else or to transfer it into a different crypto platform. But anyway, so crypto.com, I'm going to go from Bank of Queensland, so let's just go through it. I'll try to do it quickly, and because there's a lot of slides to go through. So I just log into crypto.com, put in my password, or like my numbers, and then I get to this one here. So this account here, I use this as basically a transaction account. I'll put money from Aussie dollars into this account, and then from this account, once it builds up a little bit, I'll transfer it out to a bigger account. And so here, so as you can see, I've got 21,000 in there, down to $2,000. So we just had a bit of a decline a few days ago. I took these pictures a few days ago. We've gone up about 24,000 at the moment now, but I don't really mind where this one goes too much. It's 24. It's somewhere between 25 and 15. Like really at the end of the day, I'm looking at these cryptos at the moment as real estate. I'm just buying them and just accumulating the numbers, trying to build up my numbers with the cryptos, the ones of my choice, and then sending them off and just holding those for the run. So now that I'm in crypto.com, got my account open, I'm going to be pressing deposit. But before I press deposit, I need to go to Bank of Queensland and get some details. So here I'm going to go to the login, put my numbers in, log in, and then I'm going to go into the accounts. And then from accounts, I'm going to be putting in on my everyday account, and I'm not going to be using this one here at all. So I'm just doing an example here of $100 that I'm going to transfer. And I'm going to go into, so when I go into the accounts, I'm going to press pay someone. Once I go into pay someone, I'm going to go into pay someone new. So this should be around about the same on your bank, whether you do it with Commonwealth Bank or National Australia Bank or whichever bank. We're going to be looking for the pay ID. So once we get to the pay ID, we press that. And then we're going to be looking at the type. We don't want to be putting a mobile phone number in. We want to be putting an email address in. So the next one, we put in, so pay ID, email, and then we're going to go get the email. So we need to go back now and get the email from crypto.com. So here we are back on crypto.com. And what we're going to do now is transfer money. And then we go into, oh, there you go, there's an arrow saying transfer money. So here we've got transfer fiat. So this is that word fiat again. So we're going to deposit some fiat, Aussie dollars into there. And then we go, yep, the Australian currency. And here we are at crypto.com. So with crypto.com, what I want to do, I need to get the address, crypto.com. And what I want to do is put the amount, $100 in, and for the description, I'm going to get my account number, and I'm going to be putting it in the description and the reference. I found if you put it in one or the other, there seems to be some sort of delay. If I put them in both, it never gets lost, and it always gets in there a little bit faster. So pay someone, here we are, the balance is 130. I'm just going to put $100 in, and then I'm going to do next. And then go into the next one there. And then now I'm going to go and I'm going to get these account numbers. I'm going to put it into the reference and whichever one the other one was. And so I've got those. So now I've pretty much completed this now. So I've got the everyday account. I'm going to be doing $100 and I'm going to be going this is my crypto.com account number, and the same with this one here. I'm going to press next. And then this is what it gives me, a confirmed payment. So to crypto from my account on BOQ, and here's the description here. So but basically these account numbers here are only for depositing money into my account, so you won't be able to take anything out of that with that information there. Plus I keep barely anything in my Australian dollar account anyway. So here we go, confirm and pay, yep, away we go, and finish, yep, away we go. And then so we've got $30 in there. There's $100 missing, so we go over to our crypto.com account, and there's our $100 in there. So now what we're going to do is we want to be buying some crypto. Let's have a look at that. So press the buy crypto, and now we're onto this page here. So we can just type in search for whichever crypto we want. Well, ADA is one of my favorites. I do like that one there. So so I've gone through and bought ADA. So here, what I want to do is I've got my Aussie, my AUD wallet. I'm just going to press that and then max. And so once I've done that, press that and then max. This will come up to here, so I can change this around for how many ADA I want to buy. If I just want to buy 100 ADA and leave me some AUD in there, or if I just want to use 100 AUD and just go max for what's in my wallet, and then confirm the payment and buy 132.39 ADA. Let's have a look and see what that looks like. So here's the confirm buy ADA, and then basically I just check this out. Yep, okay, it's good. Confirm and buy. Away we go. And then I've got to enter the password just to confirm this transaction, and then it'll give me a confirmation. ADA purchase complete. You purchased 132.33 ADA, so I can buy again or buy more crypto. So that's very basic. If you get stuck with this and you see me around, or if you get stuck with it, have you got my number, or just contact me some way through this, and I'm happy to spend as much time as I need with you in order to get this done, because this is a very, very important run that we're going to be getting onto. So if you're having complications getting on or getting money in, let me know, and I'll help you get out, get some money into there so that you can actually capitalize on this rally. So I actually, here's some what others people say about working with me. So everything that I've explained in here in all these previous charts is dollar cost averaging. So it's basically putting money in there every single week and not worrying about what the results are. But one thing I did find is that it's very good to know when to buy. But that's only half the problem solved. You also need to know when to sell. So, if you're just buying now to hold it for the long term, that's a very good idea and a good strategy. I do believe the crypto market is, this has a potential to bankrupt banks. I know that's a big statement, but it definitely is. So if you did want to work with me, here's just from a few traders that I've been working with. So is your account green? I asked him, and yep, pretty much 4 times my initial investment. Yep, so very happy, which is fantastic. And this one here, yep, for sure, had my first couple of 10x. So in other words, the cryptos that he's been on have gone 10 times his initial investment last week. He bought Rune at 94 and Solana at 20. And so Solana, I just bought that one the other day, one of them, and it was 250 bucks Aussie. So since he's been working with me, it's gone up quite nicely. This one here is another one. Yep, been doing good so far. Led up to the halving. Started with 40k AUD, up around 300k now, which is fantastic. So just the last plug here. Working with me is not cheap, but when we bank big. So if you want to know exactly when to get in and when to get out, I can teach you that. It is beginner friendly, and anyone can learn to invest. But as I said, traders, if you're really not, if you're only in for not concentrating too much on how the crypto market works, and not trading it for the actual buying on the day, and you just want to basically put it in every single week and just see what happens. That's a good strategy to do, because you can get some fantastic results from doing that. And if we're looking at this, you can't really go wrong. If these people are correct in their forecast and predictions for what they expect Bitcoin prices to be, we could see some massive gains. Doesn't matter how you get into the crypto market. But anyway, traders, I'm going to leave it at that. One good thing is to avoid these clowns here and avoid these dollars here, and buy something that's going to be going up in value, not going down in value. All right, traders, I'm going to leave it at that. If you have any questions, please do contact me. I am happy to help you get involved with the markets and capitalize on some of these gains that we've seen in the past here. So I'll leave it at that, traders. Talk to you again soon. See yous.